Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, February 23rd. Okay, we've got a lot to go over today, so let's get into it. Yesterday, we saw them go after mega cap tech and the Qs in general, while SPY and IWM held up fairly well, right? Today, starting at about 3 a.m., there's been a relentless attack on the Qs. I'm starting the video at 6 a.m. The Qs are down about 1.7%. Large cap futures, ES, down about 0.7%, and small caps down 1%. So the selling has accelerated on the Qs, but is now bleeding into the broader markets. So the question that I have in my mind is this a big rotation out of tech and into other parts of the market? Or is this the beginning of a broader sell-off / correction? And I think we're going to be able to answer that question today. So let's get into the charts, because we've got some really important levels that we're going to be facing today. And we've got to be cognizant of where they are and how to handle the longs that we have and whether we want to be short certain names. SPY daily. We were only down 0.77% yesterday. That is nothing. We tagged the 20, bounced up, and it was, negligible. Now today, I still think the key level for SPY is 385. If 385 holds, then the damage is contained. If 385 fails, we've got the 50 coming in at 378. So that's $7 lower. I think if you are active and tactically minded, depending on how we open, if you can get a short against 385, I think that'll be a nice trade if the selling accelerates. And if it doesn't, you've got your stop just above and you take a paper cut. Now remember, most of our book is long. Thank God we are not in, the ARCs, Kathy Wood's ARC funds. We are not in any big cap tech. We are in cyclical names that have held up better overall than the tech names. So, but if this broadens out, the selling will find us. So I think your mindset today has to become very defensive. Don't look for dips to buy. Look for places where, if you want to keep the longs that you're in, add short exposure from a hedging perspective to knock down the risk of just holding those, long positions outright. So on SPY, I think 385 is your pivot level. Anything below, I think, is bearish. Puts it on this is our uptrend off of the March lows. So technically we're already on a sell signal, but it's kind of marginal. I would want to see the 20 fail and this 385 fail before I went, kind of gonzo short on SPY. I think in general, it is going to hold up better than, the Qs and some of the other places. So, but I think under 385, we're going to see a tag of the 50 down here at 378. 2-hour view. I looked in the pre-market and we are already there. We are down around the 385 level. And of course, remember, we're going to open with a gap down. So again, that leaves the door open for them to gun it and close that opening gap or make a try at it, and then probably roll over and head lower. So from a tactical perspective, if you got a gap fill back up to 387 and you're at your desk and you're ready to watch it and be active with it, I think you can initiate a short here at 387 and then watch to see it come back down to 385 to test the opening low. And if that low breaks, then you can either, you can add to your position and look for a move down to 381. And then we've got the gap at 379.65 that is yet to be filled. And then your 50 EMA off the daily chart comes in here at 378 that we just talked about. But under 385, I think they hammer it, and I think they bring it down into the low 380s or high 370s. Here's the 30-minute chart. I mean, basically same thing, right? We're going to open down around 385 with a gap above. I would be fading this move, and if we get it, and or get short against 385 if we drop below. Here's the real problem. Qs on the daily chart. Yesterday, we got a confirmed sell signal, the first one we've had in a long time. We lost this 320, 28.50. We lost the 20, and now we're down another 1.7% the last time I looked. So we are testing the 50 here at 319. I've got a level here at 315, and then 308, and then 297. So Qs are on a sell signal, and we'll just have to see where we could get in on a short position. But the thing to point out here is once you lose the 50, you got to start thinking 200, for a test. I'm not saying that's going to happen, but you've got to have that in the realm of possibilities. And look at how much lower it is, all the way down at, 282. I mean, that's pretty far away. That's $40 from where we're at now. But there's a lot of levels in between. We've got a level here at 315, at 308, and then at 297. I think this morning the key is going to be around that 50 test, 50 EMA test, and 315. But below 315, it's going to go lower towards 308. We had this gap here on the 2-hour. Perfect gap fill yesterday. So I'll be taking that off, after the video, since that's filled. And now we've got those levels that we already talked about down here around 321. And then there's another gap down here at 316 and another gap at 313. So there's a lot of repair work to do with all these gaps. And look at this one right here, where a gap fill would bring us to 307.50, and that's in good alignment back with this 308 off of the daily. So, a down move here would repair a lot of these unfilled gaps. And what we always say, gaps get filled. It's just a matter of when that happens, and we may be in that cycle right now. The 30-minute chart here on stock charts is not going to be helpful. It has not recalibrated yet this morning. So once that does that after we open, then I'll be able to update the 30-minute chart. IWM. This is the cyclical trade with all the banks, the cruise lines, the hotels, all that stuff, all these value names that have been doing well. And we've participated in some of that with Carnival and some of these other names that we're in. Held up well yesterday, but now this morning, if we were to get a daily close below this 220, 217, 50 layer, below the 20, then we'd have a confirmed sell signal on IWM, with the 50 being the target down here at 208. So keep that in mind. And that's the biggest question I have is the contagion of the Qs selling off, is that going to infect the other indexes, and put them in sell-off mode as well? I think IWM will outperform. I don't think you're not going to have the downside acceleration that you do on the Qs, but a sell signal is a sell signal, and you don't want to sit through, a downturn with your longs. Here's the 2-hour chart. You can see it here pretty clearly. Bumped its head here yesterday and then backed off. So this morning, 222 comes into focus. Then we've got the prior low at 220, and then we've got a layer here at 218. So if we see 222 go and we see 220 go, we're going to be, in sell-off mode, and that will be confirmed on the daily chart with a break below that channel. And don't forget, we've got a gap here between 222 and 221 that remains to be filled, and we've got this prior low in focus here at 220 that, if price breaks below 220, then we're looking at 217.50, 215, and then right on down these levels. Been some intense selling in the FATMAAN names. So what I've done is backed out to the daily chart to just kind of give you a flavor of where we're at. Facebook in the pre-market is testing this 255 area, and you can see that before we had this big consolidation range with several fake breakouts where it came back in, and notice that on the breakouts, once price returned to the trading range, it was back to the bottom. And that's what we've talked about many times in the past. When you return to a trading range, the target automatically becomes the bottom of the range. So we saw that here. We saw that to a certain extent here. It only came back halfway. But then on this break, it came down. And then on this break, we're well on our way back to the bottom of the range at 250. Now, I think on Facebook, the key pivot level is 250. Below 250, I think we come down and test this gap at 245. And if 245 fails, you're down to 235. And then 221.71 was the triple original breakout. If we go back in the charts, you'll see that 221.71 level was important way back in time, and that's where it originally broke out. But for today, key off the 200 at 255, key off the bottom of the range at 250, and then key off the top of the gap at 245. Apple is in real trouble. We see here that it has broken its daily trend line and has lost these fast moving averages, the 8, 20, and below the 50. And now we've got a layer of support here at 124. But then beneath that, all the way down to 115. And we still have a big unfilled gap here between 107 and 96. It seems unfathomable for, Apple to find 96. Try not to think that way. Try to think level to level and let price lead the way. Anything can happen. We have no idea where the market may be ultimately heading, but once you lose the 50, then you got to, like we said, start thinking about the 200. And so first up is this 124 level, and then 115, below that. So I think you could put on, a short against 124, and that would be a good anchor point if you wanted to try a short on Apple and look for 115 on the downside. Tesla. The brown line is the uptrend off of the March, April lows. You can see that we haven't violated that yet, but we have broke below the 50. So today, this 650 becomes a huge level. Why? Because we've got lateral support here at 650, and we've got trend line support at 650. So that's a double layer. If it can't hold that, if it can't hold an uptrend line off of the March lows and lateral support at 650, I think you can almost book a move down to 500. So I think that would be a compelling trade to take if you see 650 fail. Because by all accounts, you should get a bounce here at 650. But like I say, if it can't, that speaks to the selling intensity of, that's hitting Tesla. So I would key off at 650, and below that, I would not be afraid to get short with a stop just above and look for 500. And remember, Tesla is the biggest holding of ARK of Cathie Wood. It's in 3 or 4 of her ETFs. And if they start selling ARK, then they're going to start be selling Tesla as well. So it's a big component now, not only in the broad market. It's in the S&P 500, it's in the Qs, it's in ARK, it's everywhere, right? So if they start selling these ETFs, Tesla's going to go right along with it. Microsoft, 230 is an important level. That's where the 50 comes in. If price were to lose the 50, I think you're coming down here to 222.50, where we had this big $20 trading range before. And then if it loses 22.50, you're coming down to 212. You're coming down to test the 200, and you're coming down probably to the bottom of the box, which would be the technical target. And there's going to be bounces along the way. Got an uptrend line here, may provide some support at 222. But if price comes back inside this trading range, that is not good. That would call all of this into question as a fake breakout. And then technically speaking, the target would be the bottom of the box. And, with a first stop halfway and then a test of the 200 to see if that can hold. But if things get ugly, then, back down here to 202. Amazon. Yesterday, we had this move on earnings. We've been playing these gyrations on the free 50 club on the 60-minute chart. But yesterday, things changed. And there was a good opportunity. I'm not going to go over the 60-minute chart, but your opportunity was when price came back to backtest 32.50, then you got your free 50, actually $75, because you had your objective short against 32.50, and then it closed down at 31.75 at the top of this gap. Now this morning, when I last checked before the video started, price was at 3,100, and you can see all the reactions in the past where 3,100 has held. So this morning, if price breaks below 3,100, then I would be looking for a test of the 200 down here at 3,000 and potentially at the bottom of the box here at 29.50. In my mind, price has got to get back above 32.50 to negate the sell signal. And that was a very important level because that's where the 50 EMA was at, right at 32.50. Google. Pre-market was at 2,000 inside this huge gap that's open all the way down to 1920. If you got a kickback, if there's a kickback rally this morning that brought price back up to 2040 or thereabouts, I think you've got a very objective short on Google to be rejected between this 2040 and 2050 and then come back down to fill that gap. And if you get stopped out, you get stopped out. But I think they're going to continue to go after tech, and with no support within the gap, I think that's going to be an easier setup because there's no technical support to have to grind through. I can see that coming all the way back to 1920, and that would be $120 lower if you got it near the top, at the top of the gap. Netflix. Pre-market, I showed it not down that much. I showed it around 530, but we've got this is a 60-minute chart. We've got a lot of nice levels here that have worked well in the past to trade against if you're going to be active. We've got a gap from 530 to 524. We've got a gap from 515 down to 502. So if this thing gets rolling downhill, there's some very nice levels where you can either scale in short or get short and look for bounces along the way at these levels. Another thing that I wanted to make note of, Jay Powell is talking on Capitol Hill today starting at 10 a.m. And that testimony will carry through to tomorrow starting at 10 a.m. as well. And to be frank, although he's gotten better, I don't trust Powell. I think if you go back and look at every single time that he talks, no matter if he doesn't say anything, the market goes down, right? It's got to be over 80 to 90% of when he opens his mouth, the market goes down. So I don't trust him. I don't think he's going to say anything that's going to save any downward trajectory. I mean, what can he say? We stand ready with all our tools. We have plenty in the toolbox, and we need fiscal stimulus and all this stuff. It's going to be the same old thing. But the chances for a mistake, for instance, what if he's asked about these spiking interest rates that have gone from 1% to 1.38% in 2 weeks? What's he going to say? No problem. We're going to let it run hot. That's what we want. Or what if he says something like, well, we stand ready. We're not going to let it get away from us. I don't think the market would like that. Any hint that they would do something inside of a year, I don't think the market would like that. I'm no expert on Fed watching. I'd rather just watch price. But I think the chances of a mistake out of Powell over the next 2 days is elevated, especially when the market is jittery already. Any little, hesitation, boo-boo, whatever, you may see a huge red bar after that. And I'm not predicting that. I'm just saying watch out. Watch out for Powell and whatever he might say. And his prepared remarks are going to be released at 10 o'clock. So everything, his prepared testimony is going to be out there, and the algos are going to read that instantly. So I don't think it's going to be the prepared remarks that get him. If there is, any problem, I think it's in his, whatever he says, right? Whatever he says, like I say, in the past, the market never likes what he says, even if what he says is nothing or totally expected. The market seems to fade. So I have a hard time seeing him save whatever downside may be happening here this morning. So watch your levels. Look for places where you can add some hedges, especially if you want to keep your longs. And let's watch to see if the NASDAQ sell-off infects SPY and IWM, or if IWM and SPY in relative terms holds up. If that's the case, then it's a rotation out of tech and into value and cyclicals, banks, S&P 500 names. But if it starts rolling over, if it's infecting the other segments of the market, then we've got broader worries. And don't be afraid to, if you've got some embedded wins, don't be afraid to take them off, because I think we'll be able to get those, rebuy them back at lower levels if this pullback morphs into something more than a wiggle. So let's leave it there. I'm going to try and give you some additional setups this morning, try and fine tune it. Oh, I wanted to say also, EV segment, solar, bubble stocks, and I'm not going to go through the list, but you know what they are. These ultra high valuation names, they're going to get hammered. EV is going to flow with Tesla. You're not going to see these battery stocks and these other names hold up when they're going after Tesla hard. So if you're looking for shorts, look in those areas. Solar, EV, bubble stocks, ARC. If you wanted to look for some short exposure, but you didn't want to get all involved in individual names, I think they're going to come after the ARC names hard. And she's got several of them, you know, ARC G and ARC K and 3 or 4 of those, you know, her innovation ones. They are all, you know, super high valuation names. A lot of them don't make money. So if they're going after tech hard, they're going to be going after Kathy Wood as well. So that might be a nice way to play, you know, some downside without trying to nail a move in Zoom or you know, any of these other names. And her option chain is nice and liquid, so I think you'll be able to get some good fills there as well. So let's wrap it up here. If you're new to the channel and you found the information helpful in setting up your day, please hit the subscribe button and the alarm bell so you're notified of my new content. And also over in the show notes, you'll see links to the blog site and a place to register for all my content. If you do that, you'll get a nice, neat email every time I publish information or trade adjustments, anything off of my desk. You will get an email on and you won't miss a beat. And you'll also get an invitation to our trading room. We'd love to have you there. We've got a nice, motivated group of aspiring traders that are working hard to help each other, celebrate when we do well, and support when we have bad days. And that's always a nice thing to have when you're an independent trader. That support group, that makes all the difference in the world. So keep your head on today. Go level to level. Try not to get panicky, because that's when you make mistakes, right? So go level to level. Try to stay calm. Take a deep breath. And between now at 6:30, between now and 9:30, lay out the game plan that you want. And then when things get crazy, you've got your set of cliff notes right on your desk. You know, if we hit this level, I'm doing this. If we lose this level, I'm doing that. And that way you can follow your game plan, right or wrong, but it won't be firing from the hip. And that's the last thing you want to do when markets are moving fast, is just go off firing off on things. And you can get yourself into a deeper mess doing that than just following your game plan. So good luck today. I think if you stick to the levels, you'll do fine. I think you guys know what to do. It's just a matter of focusing on execution and focusing on execution to your plan. So have a good trading day and talk to you next time.